When people hear the word commodities, they often imagine huge ships carrying oil, giant mines filled with metal, or fields of corn stretching for miles. And while that's all true, commodities at their core are simply the basic physical goods that keep the world running. Oil, gold, wheat, coffee, and natural gas. These aren't just products, they are the foundation of the global economy. So let's make this simple. A commodity is something that can be bought, sold, traded, or produced in large quantities, and is essentially the same no matter where it comes from. Gold is gold. Oil is oil, wheat is wheat. These goods are standardized, meaning one barrel of oil is just like another. This is what makes them easy to trade. Now, think about your daily life. The coffee you drink in the morning, a commodity. The gasoline in your car, a commodity. The bread you buy at the grocery store, made from wheat, another commodity. We interact with commodities every single day, even if we don't notice it. Commodities are usually divided into two big categories: hard commodities like metals and energy, gold, silver, copper, oil, natural gas; soft commodities like agriculture products, corn, wheat, coffee, sugar. The prices of these commodities move constantly, reacting to things like the weather, the wars, the supply shortage, economic growth, geopolitics, natural disasters, and others. Even simple human behavior, like more people drinking coffee. And here's where traders come in. You don't need to own a barrel of oil or store gold in your house to trade commodities. You trade the price movement of these goods through futures, CFDs, ETFs, or options. But why do commodities matter so much? Because they affect everything. If oil rises, transportation costs rise. If wheat rises, bread becomes more expensive. If gold rises, it might signal fear in the markets. Commodities drive the cost of living, the cost of production, and even government decisions. Let's break down a few key commodities. Oil is by far one of the most important. When oil moves, the entire world feels it. It affects transportation, manufacturing, energy, and inflation. Gold is called a safe haven. When uncertainty hits, recession, fear, inflation, people run to gold. It's like the emergency savings account for global markets. Agricultural commodities like corn and wheat are essential because they are tied to food supply. Weather plays a massive role here. A drought can push price higher, a good harvest can bring them down. Now, from a trading perspective, commodities are incredibly interesting because they move based on very real events. Unlike stock prices, which can be influenced by earnings or corporate decisions, commodities prices are tied to physical supply and demand. If there is too much oil, prices fall. If there is not enough oil, prices jump. Pure fundamentals. Commodities also move in cycles. Energy cycles, agricultural cycles, metal cycles. These cycles follow global growth, seasons, and market sentiment. That's why many experienced traders love commodities. They have rhythm. And yes, smart money concepts apply here too. Liquidity pools, fair value gaps, displacement, and structure happen in commodity charts just like forex or stocks. Institutions use futures markets heavily to hedge and speculate, which creates very clean price behavior. One of the most fascinating parts of commodities is how businesses use them for protection. An airline, for example, uses futures to lock in fuel prices. A coffee company locks in coffee prices to protect their costs. Farmers lock in crop prices before harvest. These hedges help stabilize the industry, while speculators help create liquidity. For traders, commodities offer unique advantages: strong trends, high volatility, clear levels, impactful new catalysis, and predictable seasonal behavior. But they also require respect because volatility can be fast and unforgiving. Large moves can happen overnight due to war, weather, or economic policy. Let's tie everything together with a simple story. Imagine a drought hits a region that produces most of the world's coffee beans. Suddenly, supply drops. Coffee companies panic. People start buying futures to secure prices, and the price of coffee skyrockets. As a trader, you're not buying actual coffee back. You are trading the price movement created by real-world events. So, to summarize, commodities are the raw materials of the world. They are essential for everyday's life. They move with the global events, cycles, and supply and demand. You don't trade the physical product, you trade the price movement. And they offer both opportunity and risk for traders who understand their behavior. Once you understand commodities, you understand the heartbeat of the world. You see how weather, politics, technology, and human behavior all come together to move markets. And that knowledge gives you a huge edge, not just a trader, but as someone who understands how the world really works.